The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 283, NASDAQ off 36, S&P's down 29, gold flat at $15.83 an ounce. We got silver down 8 cents, trading at $17.91 an ounce. Light sweet crude off 22 cents, $51.92 a barrel, notes and bonds. You get the 10-year up 5 ticks, trading 130.115, 30-year up 14 at 163.11, and King Dollar down 233 ticks, trading 97.634. The euro is going topside. That's bringing that dollar down. The euro is at 110.62. The yen is at 108.73, and the pound is at 131 to 1 U.S. dollar. Tom O'Brien, you go shopping at Amazon this morning?
I went shopping there last night.
I'm telling you, you definitely went shopping there last night.
My goodness, right?
Look at these numbers, folks. This is just amazing. And there's a lot of happy people out here today. There's no doubt about it. Amazon's up $1.75. It blew away its all-time high. And the thing that's so intriguing about this, folks, and we've been talking about it, you know, Amazon, the rest of the market was moving, and Amazon just didn't move. I mean, it's laid at this 1,700 area for a long time, and guess what, man? Bezos just blew these numbers apart, right?
He sure did, man. Earnings-wise, right? So much for worried about bringing money to the bottom line and spending on delivery. They crushed it.
They did, man. They did. I mean, you're talking about. I don't have the exact number in front of me, but
I can play. It was $6 and something for their earnings. Let me jump to. I even have it.
I just got it. Okay, so yeah, there it is right there. $4.11 was the estimate. $6.45 is that what they brought to the bottom line. I mean, you
got it, man.
That is, what's that? Almost 50. It is 50% more.
It is, and they grew on revenue, right? In terms of just even they beat on their expected revenue. They grew 21% year over year, up to $87.4 billion. The market was only looking for $86.2. Even Amazon Web Services, they beat. They were looking for 9.89. They came in at 9.95. The market was a little worried there because Microsoft having a good quarter over their Azure cloud, Google with their cloud platform as well. But Amazon, man, and they said they spent a little bit less than the 1.5 billion.
Okay.
So the quote that they have in here is that they spent slightly under 1.5 billion during the fourth quarter. And then they say that they're going to spend $1 billion more on the initiative. This is for the same day and next day delivery.
Yes.
So $1 billion more on that initiative in this first quarter, and again in the second quarter, as they get that streamlined completely.
And what that does, folks, okay, it kicks up the sales dramatically, because the bottom line is that you want something like in 15 minutes. Well, guess what? We're at like 5 to 7 hours right now. But bottom line, I'm sure that that's how you get more sales.
Just wait until drone technology takes off. I mean, this is not far-fetched. It's really not. I mean, at one point, we joked about just wait until they got little drones flying everywhere, dropping packages, right? I mean, where do we go to next if they've spent the money to have same-day delivery? Well, same hour, right? I mean, seriously, whereas, and know that they're just continually, and how about 150 million Prime subscribers? The last time they gave an update was April of 2018 when they had 100 million. So in less than 2 years, they've added 50% growth into their Prime subscribers worldwide, 150 million. And when you got those people, I'm one, I believe you're one.
Yes.
You're in the ecosystem, man. You're spending more money, and they have 150 million of those people now compared to 100 million in April of 2018.
Listen, there's no doubt. When I'm ordering stuff, the go-to is Amazon. I don't even think about it.
Yep.
You know what I mean? It's just, there's no two ways. Pretty amazing. So let's look at this market. So what we did yesterday, folks, is that you got down to I'll do the S&P first. So the SPY got to a low out there yesterday of 323. The low of Monday out there was 322. Volume yesterday was 75 million. You were going into 84. Now, this market looks like it's down pretty good, okay? But the bottom line is that realistically, it really isn't. You know, you're down $2.40. The low of yesterday, of course, was 323. The way this market is trading, you know, I expect we're going to shake this thing off again, okay? So
that was quite a charge higher, man. I was out of the office after 2 o'clock yesterday.
Yes.
And I got home. I said, whoa, what happened, man?
It's so true. I mean, yeah. they ran this thing right into the close. And, you know, technically, when you're looking at this, folks, I mean, you know, my take is that the NDX at least is going to go test its highs. We'll see whether it can hold it. But, you know, you can see, if I look at the Qs, the low in the Qs yesterday was 219.68. Well, guess what? It only get down to 221.34 today. You're down 98 cents. Inside the NDX 100, of course, the strength is Amazon. Amazon's up 9.2%. You get Charter Communications up 4.5%. Vertex Pharmaceuticals up 1.6%. And Alexa is up 1%. Taken away from it, Amgen's down 5.8%. AMAT 3.1%. ASML 3 and NXPI. So you get a couple chip equities on the downside, okay, which is a little bit dangerous for the NDX 100 as well as the NASDAQ Composite. That being said, I suspect, you know, there's no doubt the coronavirus, folks, okay, this is hitting this market. You know, like, Tom, I pulled this up and I can't find it. Like the headline says, U.S. tells Americans to exit China.
Okay.
The death toll tops 200. Right now, they're saying the cases have soared to 9,950. And when I'm going through this, I mean, they have the aspect. Let me just see this for a second.
U.S. up there. Scroll up. I saw it. U.S. State Department on Thursday night warned Americans not to travel to China. Maybe that's where.
Okay. Oh, there it is. Yes. Okay. That's pretty. That's pretty intense, man.
Yeah. It was a do not go there, which is the strongest. It's basically the strongest recommendation they can make. Usually, those types of recommendations reserved for places like North Korea, to put things in context.
Yeah.
You know, I mean,
China's a big country. You know, I mean,
I would say so. Yeah. Right.
You know, as to where the virus is, and you know how big the country is, it's like pretty amazing. Saying, okay, don't go to China, period.
No, I mean, just commonsensically, though, unless it's like a dire need for whatever it is, for family, for business, and I'm not sure dire need for business, you know, it would have to be pretty dire. Yeah. I don't know why you would need to go to China right now.
No, I agree. I'm not, I'm not going, man.
Exactly.
Yeah. There's no doubt. It's you know, until we get a handle on, you know, where this whole thing is going, it's like, okay, you know.
Exactly.
Percentage-wise, we know that those cases are going up percentage-wise pretty intense.
And some of the timelines here, I had, let me get up here, because whoops, I think I just closed it out. All right, I did. I'll pull it up during the break. They had just the airlines in terms of how long they had suspended. I mean, you have some airlines already pushing things back to March.
Yeah,
or canceling service.
British Airlines canceled to March 1st.
So you're talking about, you know, a full month at least, and that's just as of right now.
Yeah, that's got to hit GDP right across the world. There's no doubt about it. Dow Industrial's down 302, Nasdaq's up 58, S&P's down 34. Stay right there, folks. Tommy and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow right now down 317, Nasdaq's off 63, S&P's off 35. We get over and we take a look at this 10-year yield. You know, it's hard to comprehend that we're even talking about that you're going to go after the lows again. But guess what, folks, okay? The way this is set up right now, we are at 1.53. It tried to get traction out here this morning. It got to 1.59 and then just gave it up in spades. I mean, this is like, you got to be kidding me. And, you know, we bring this back, you're going to see that 2016 right now is just sticking out like a sore thumb. You know, the lows of, let's see, the lows of 2019, Tom, is 14272. And then, you know, guess what? The next leg down is 1.318. So it's pretty amazing, you know.
It is. It is for sure.
You know, there's no two ways about it, man.
Yeah, cheap. Be interesting to see how long those yields stay low for, and how that hits, you know, the refinance market, the real estate market, so forth. I mean, we're approaching that 1.5 mark, which is just even in people's heads, I think, crazy low.
Yeah, exactly. In my head, I agree. And it's so funny, folks. We only came down like from 1.7, but 1.5 sounds tremendously lower.
On a 10-year yield, I mean, you're talking about 10 years, 1.5. My goodness, right?
Right. Now, Exxon, Chevron, folks, we've been talking about this. There's big problems in the oil market. This thing is busting through everything. You know, Chevron, Exxon come out with numbers. We can go through the numbers, but the bottom line, technically, now you get a major breakdown here. You know, you broke the 66.55. You're at 62.73. They come out with the numbers. That opens up $56. Excuse me. Chevron, same number. Technically the same setup. Chevron's down $3.90. Okay, this is like a disaster. It's better. Bottom line is it's better looking than Chevron. I mean, than Exxon. But guess what? Your high volume low here is $100. And so, you know, and I guess the Chevron deal, Tom. Here, let's pull the Chevron up because they're blaming natural gas. If they're dependent on natural gas, man, there's going to be there's a problem here.
Right.
Yeah, seriously. So let's see. The estimate had been adjusted earnings per share. The estimate was 145. They said they did 149. But that's the fourth quarter. They lost money. They lost $3.51.
I guess that's the adjusted, right? It must be nice to adjust things to a profit when you lost
Yeah.
351.
That's wild. Yeah.
Yeah.
Right, exactly.
Look at that capital expenditure, $6 billion.
Yeah. Let's see, gain on the sale, and that's after the company recognized a $1.2 billion gain.
Read the one above that. How about fourth quarter loss included previously announced upstream impairments and write-offs totaling $10.4 billion associated with Appalachia Shale, Kitimat, LNG, Bigfoot, and other products. So it's shale, it's liquid natural gas.
Exactly.
$10.4 billion.
Let's see. One of the Tigers, Royal Shell. Okay, let's
Royal
just look.
Dutch.
Here we are.
RDSA, I believe that.
Okay, so that is trading now. We're looking at this. I believe this is trading in Amsterdam. Where are we trading here? Let me see. The Hague. Yeah, so we're trading in the Netherlands here.
52-week low today on that one.
Wow.
There you go.
Look at that. Okay, so that's game for 21. You're at 23. Yeah. What did I just... Some of these are hard to comprehend, folks. I'm going to bring this back 25 years. Look at this. So it's in 1997, it was trading at the same price. That's hard to comprehend. Wow.
It is. Now, I wonder what kind of dividends they pushed out over that time, maybe?
I'd say big dividends, right?
Yeah, I mean, hopefully for those shareholders, yeah.
Yeah, I mean, this dividend at this price is
there you go.
7%. Wow.
Yeah.
So there's no doubt. The oil companies are not going out of business, but guess what? No one is buying them, folks, okay? There's some real problems there.
Oil just keeps dropping, man. Yeah. 51.79. I'm looking on your Bloomberg right now,
yeah.
And again, that is in the face of some pretty heightened tensions over in the Middle East right now that are just completely not even in the realm of the market caring about that.
Right. And, you know, what you had out here today, so this is going to be really dangerous, folks. Oil tried to get to a high again today, gave it up on price, 53.36. You're at 51.75. Maybe bone this back just a bit more, 6 months. Yeah, man, you're going right after this $50.80. And, you know, the volume yesterday was a monster, 720,000. It looks like we're going to do that again. So this is really dangerous because, actually, hold it here. It's an ABC down. So low, okay, this is going to be wild. So we broke a B point yesterday, folks, of an ABC down. That B point was $52.13. 713,000 contracts was the B point. We did 720. So your A point on this is $59.77. Your B point is 52.13. What did I say? 59. That's $7.50. Man, that would be saying we're going under 50 if you get a full potential ABC down, because you get that'd be $47. That's a number, man.
Yeah.
That's a number. We break 50. Well, it's surprising that the Dow isn't down more. Do you know what I mean? It's,
sure.
You know, when you get something like that. But
yep.
As I said a little bit earlier, it looks to me, see, the Dow is trying to press the low from yesterday. The Dow got down to 28,532, and 489 was the low of yesterday. But I don't think it's going to do it just yet. Window dressing is going to be powerful, man. I mean, they keep buying the dip. There's no doubt about it.
Sure.
It's out there. And as we're speaking here, this 30-year is just, well, here, let's look at the euro first. So for some reason, folks, the euro caught a bid. And it's a good bid. You know, 2 days ago, the euro was at 109.92. We've hit 110.68 today. And, you know, we'll see where you get some follow through there. It doesn't take much for the euro, meaning the euro doesn't have to go up much for that dollar to pull back, because when we're talking about the weighting structure, the euro is 60% of the dollar index. Okay, so today Brexit. I get it's so wild, man. And like, it's a non-event now. I mean, that's
yeah.
They're legally out today, but what ends up happening is that they got another 11 months, I believe, to get all the trading, set up. So we're going to be talking about this for a long period of time, man. It's going to be pretty wild.
You know, just jumping around to the coronavirus, I got Bloomberg up here with an update. Pretty, I don't want to call it amusing in the face of how serious it is, but China calls U.S. reaction to outbreak unhelpful. And what it has to do with is that the U.S. questioning, basically, I believe, what's coming out. So Chinese officials taking issue with the U.S. comments about the country's response to the outbreak and promised they would bring the infection under control. Quote unquote, U.S. comments are inconsistent with the facts and inappropriate, the ministry saying. Yeah, of course China's going to be pushing back. So U.S. officials said this week they had difficulty getting specialists from Centers for Disease Control and Prevention to the front lines. I would question anything China's saying, of course, as this comes, I mean, almost like a PR battle we're getting into.
Oh, it's going to be a PR battle.
Yeah, exactly. You're seeing the beginning of it. Totally.
Big money. Dow down 268, NASDAQ off 45, S&P's off 30. Stay right there, folks. Tommy and I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights Day, by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 317, NASDAQ is off 68, S&Ps are down 36. Let's take a look at some of the higher volume equities out here today. You have Advanced Micro down 98 cents, GE's off 14, Apple's down $8. They're taking that.
They sure are. I hadn't seen that one yet.
Yeah, and World Wrestling, this is taking a hit. This is
WWE. They're getting body slammed.
Yeah, they're getting body slammed. All right. Look at this thing,
from the
folks.
top ropes.
Yeah. So this 12-month low, $45. And what you're going to see in here is that this is the second gap down. It had a gap down from $68, October, got down to 53, made it all the way back to 67. Now you get another gap down. That being said, the stock just came back $5. It was down $15. Okay. I guess Vince McMahon basically canned two of his top executives. That's what the market's worried about here. So it says Chief Executive Officer ousted two of the company's top executives. The news prompted multiple downgrades on Wall Street. We'll see.
The thing that struck me, if you could scroll back up for a brief second, just saying that the analysts have lost confidence in the company's own financial projections. That's quite a statement.
That is.
When you can't even believe what they're putting out, right? I mean, that's kind of what they're saying. You got two people getting fired. Vince McMahon, he's not only the CEO, he's also a character in the WWE, and maybe they think he's boasting a little bit greater than he might, that he should be. And of course, it's a public company. You can't exactly just be lying. There would be accountability for that. But you got a lot of wiggle room in there when you're talking about projections, folks, because projections, pro forma, you can always create a reason why you think maybe, legally that, I thought things were going to turn around. We were projecting that we were going to have a banner year. What do you say to that, right?
Exactly. The other big news, this is big, folks, okay? IBM. IBM, Ginny Rometty is retiring. Now, this came out of nowhere. So, she's been here, I think, since 2006 or 7.
Maybe 2008. I think it was 12 years.
But that's a big number.
Yes. And I had heard analysts talking about last night, the new CEO was one of the biggest proponents of the Red Hat acquisition.
Okay.
And the new president is going to be the former CEO of Red Hat.
Oh, there we go. Okay,
so they're really kind of intertwining that acquisition. That was $34 billion, I think they paid for that in the end of 2018. So yeah, you can see the changing of the guard, right, as that Red Hat acquisition looks like it takes stage over there.
No doubt, and you know what you have, okay, which is amazing, folks. As Tommy's saying, this could be a total transfer of culture, which is really hard to do in IBM. But guess what? If that president is, from Red Hat, well, that's where we're going with this thing,
That's the whole deal, You have the CEO, the big proponent of the deal, and then that CEO, you got to imagine, right? If you're the CEO, you're going to approve who they're putting in as president, right?
Yes.
So he says, hey, I want the CEO of Red Hat right next to me because this is going to be the way that we grow in the future. And maybe it is. Maybe that's the turnaround, and that's what the market, reacting for sure.
Which would be great. I mean, because the bottom line is that IBM, man, this is not the first time that it's had its struggles. But this thing, you take a look at this chart, this has been struggling for a long period of time. Yeah. The all-time high is 2013, 215, and then we went down to 105. If you bring this back, I mean, IBM was on its deathbed, and then they invented this chip, and of course, what ends up happening is it went dramatically higher. But
what's crazy is, so here, I just pulled up on mine. So she actually became president and CEO 2012, so it's been 8 years.
Yeah.
And if you look at where it was in 2012, IBM stock has fallen 26% over that tenure. In comparison, the S&P has grown 160%.
Yeah, right.
That is quite a miss.
It's quite a miss, and she's still really young to basically not stay there. So, but
I mean, the tough thing, and the buck's got to stop somewhere, right? A company like IBM, they're positioned to at least be able to compete and grow over a period where the cloud takes off. And the one thing I'm just going to point out is that in 2018, she takes in $17.5 million in compensation, and the stock has gone down 26% over the course of 8 years. Why are shareholders paying that kind of money to a CEO that obviously is missing the buck, man?
Right.
So hopefully they get it turned around, because that's where, it's one thing, people are always complaining, sometimes rightfully so, about CEO pay. But guess what? No one's going to complain about Elon getting his pay when the stock goes from 150 to 650.
No.
But what's a CEO doing making $17 million when their stock just keeps going down over the course of 8 years as the cloud is just taking off? And look at Tesla. I know. Tesla holding steady, right? I pulled it up during the 8:30 show. no reprieve at all from that spike higher, man. Yeah.
Right. It's a big move. In fact, I just had one of my friends that sent me an article about those power walls. So and I've looked at these power walls before, folks. You know, you connect the solar with the power wall. The batteries hold it. What is happening is that the technology is expanding very quickly about the amount of electricity it can actually hold. Because if he ever gets that thing going too, that's a whole different ballgame.
Yeah.
You know what I mean?
Yep.
So we'll.
Oh yeah. You know, I heard an analyst yesterday, now a huge Tesla bull, I forget who it was, on Bloomberg, and they were talking about, you know, just comparing it to the likes of Netflix, okay?
Okay.
And it was just an interesting way to look at things because you have, can you pull up Netflix and pull up their market cap? I believe Tesla's pushing about 116 billion for their market cap. Tesla, 151. Right? Can you go into the revenue for Netflix? Because things really get interesting when you look at a company like Netflix, PE of like 83. All right, they're taking in 20 to 23 billion. Can we jump back to Tesla now?
Yeah.
Because Netflix, right? Huge competitors coming on board in a big way right now. They're taking in $20 billion in the year. Check it out, man, right? You have Tesla taking in 25 to 32. You could say that they are leaps and bounds ahead of the competition of where they are.
Sure.
So, you know, does Netflix deserve a $150 billion market cap right now, and Tesla only deserves a 115? Just something interesting to think about. I heard that, and I said, you know what? That's a great point, man, because Netflix, you got Disney, you got NBC Peacock, you have Amazon Prime. No one even talks about them in terms of the competition, that they're always going to be a competitor. And then who's eating Tesla's lunch? Nobody, man.
No one. And what is happening here, folks, is this. There's plenty of other car companies that are making electric cars, but no one's buying them. Tesla is like Apple. When an Apple come out, and technology-wise, if you talk to anyone that has a Tesla, they will tell you it's the best car they ever had. You know, and I've talked to plenty, well, not plenty, you know, 10 or 12 guys that have them, that have had a lot of other high-end cars, and they just think it's extraordinary. What the one downside, I'd say, if you know, when you're talking about high-end cars, they still say the inside is not as pretty as they'd like it to be, but the speed and the auto drive, they just go crazy about. You know what I mean? So it's and if you've never
that was a great comparison, you know, and maybe that means they're both a little out of whack, Tesla and Netflix, but
they're growing,
boy, oh boy.
man. They're both growing. Stay right there, folks. Tommy and I are coming right back. We have the Dow down 338, NASDAQ off 68, S&P's down 37. We'll come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now down 350, Nasdaq's off 73, S&Ps are off 39. You know, there's a great question in the den, folks, at our trading room. And what it was is that Tom and Tommy, how much does Tesla drop if they issue a secondary to pay down debt? Well, what happened, folks, this is like pretty sick. So, you know, when you look at Tesla, Tesla has a short interest still of, where are you? 17.5%. So, of course, what ended up happening, you know, if we just look at the last 6 months, what you're going to see here is that we just went from $218 4 months ago to $637. Well, what has also happened, folks, is that Tesla's debt, okay, the bonds are basically so strong, it's incredible, because what has happened inside the debt market is that when you have an equity that goes so tremendously higher, your whole system goes up. So they don't have a problem with their debt. It's just the opposite, actually, okay? You know, which totally makes sense, because guess what? You know, your company is worth so much money, so every time that the market cap goes up, the actual debt structure, even if it doesn't change, goes down as a percentage of what you're worth. That's what it comes down to. Let's say you had a house that's worth $1 million, now it's worth $10 million. At $1 million, even if you had $1.1 million on debt, well, that's right. I can understand what he's saying, that was a lot of debt at that particular point, but now it's worth $10 million, guess what? That's 10% of it. So,
yeah,
you know, the bottom line is that what happened is that the equity people that were shot got burned beyond belief. The bond people that were shot got burned beyond belief, you know.
They really turned a corner, you know, in a big way.
Huge. There's no doubt. And it seems that they... you know, they're banging out cars, man. I mean, the coronavirus, no doubt about it, what's going to happen is, you know, that's going to basically slow down production. But, you know, the world will get a handle on that. You know, it's bad right now. There's no doubt about it accelerating. But that'll change, whether it's, you know, 6 months, 6 weeks, 7 weeks, whatever.
Yeah,
know what I mean?
No, it looks like it, and hopefully, that's for sure.
Yeah. Pretty wild. Okay, so let's get over to these S&Ps, because you take a look at these S&Ps,
we're approaching the lows where we were at yesterday.
We are, and one number, 3252, is where, you know, basically you had some support there. So that's where we went topside yesterday at 1420, at 220. Now, that being said, that's the number to keep your eye on, folks. The reason being is that you're below it right now, but you're below it with tremendously lighter volume. And I'm talking about in the futures market. If you happen to be watching Tiger TV, this is a 10-minute chart in the futures market. And the last big sell that we had is actually at 3266, which you can see is 16 points higher. But this is how markets basically react coming into, you know, lows or highs.
And that's the opening bell bar, right?
It is. It is the opening bar. And then when we go to 1010, it's 3253. Now, from that point on, every 10-minute bar inside the S&Ps are getting slightly less, and that's a heads up that you get a bounce coming. So if you jump on the other side of this, that we hit 32.47. If it gets on the other side of this 32.52, then you can expect it's going to be clawing its way back, probably the rest of the day. So, we'll see where this baby shakes out. If I go over to the SPY, let me look at the SPY, because the SPY looks to me, no, you're close to that low. That's pretty cool. Okay, so the low of yesterday was 323.54, and we got the 324.25, and so 75 cents.
Can we take a look at gold? Because gold trading pretty much inverse with the market, right? I mean, we're climbing to almost the highs that we were at yesterday, I think. Yeah, 15.89. I think the high yesterday was 15.90.70, maybe I'm showing on my chart in terms of the high.
Yeah, this is nice. Yeah. 15.90.70 was the high yesterday. We just blew by it.
Okay, there we go.
And what you have happening here, folks, we get volume again. This is pretty cool, man. What I don't want to see, I don't want to see 15.95 today, because no, I got to go back to the last contract, because I remember that was like 500,000 contracts on the last. What I'm talking about, folks, the B point of this potential ABC structure up is a complex one. We already had taken it out, but we gave it up in price. Is 15.95.70. I'd like to lay out right like 15.94.
Okay.
Because if that's what you'd have with volume, that would be saying Sunday night. We'll get a nice weekend of sleep, wakes up in the morning, ready to go, 6 o'clock, boom, goes right through that level.
Hey, can we take a look at Google? I believe we get Google earnings on Monday. Can we check out where they...
Here's the next monster, right?
Is that the 3rd? Is that Monday? It sure is, after the market. Cool.
So they're going to be looking for 30... Oh, look at that. My God. They're looking for $38.4 billion in 90 days.
Yeah.
And taking... I guess $12.50 to the bottom line.
Yeah. Not sure what's going on with that earnings graph, right? But yeah, nonetheless, about $12.50 a share.
Big number, man. Big number. And yeah, you're laying right at highs here too. I mean, your all-time high is 15.03. We bring this back. Okay, so this is interesting. This is, oh man, we're going higher. This is this. So on a monthly, folks, look at this. Let's see, it's just the end of the month. 31 million shares. Oh, 31.95. Look at this. It's going to be an ABC up, but man, it's really close. So the month of the top of the consolidation, July of 2018, we did 31.9 million. Right now, we're at 31.8 million. So we're going to do another 100,000. And if that's the case, man, where would it be? That would be crazy. 663. Well, where would the most conservative one? Okay. This is like a 600 A to B on a monthly basis. Would you get your 15? Oh, that's right. $1,570. You're at 1440. So 1560. That'd be $60 over the high. I could see that. Pretty amazing.
I imagine the market's going to be looking at their cloud revenue for sure, especially with Amazon beating. Microsoft beating in that Azure as well, so it'll be interesting to see how that comes in for Google, along with, of course, the advertising. Facebook slowing down a little bit, right? As in, it's pretty remarkable you say slowing down. They're growing at almost 25% on billions of dollars, but a little bit less than the market was looking for.
Right, yeah, no doubt. And these are monster numbers, man. You can see that, and picture something, folks. You got interest rates almost at all-time lows. You got market at all-time highs. So these companies have plenty of money to spend on advertising. I mean, it's like the cash flows are out there. So
hey, how about Disney? I believe we get Disney earnings as well next week, maybe Tuesday or Wednesday. Can you pull up them? Where are they? So Tuesday after the market. Okay.
Yeah. And they're going to be looking for $20.8 billion and $1.47 to the bottom line.
Yeah, it'll be interesting to see. This is going to be the first earnings call with the Disney Plus streaming service having started.
Okay.
So you see on the chart there that you had, well, you're jumping away, but you see the thrust higher, exactly, right? That's where they announced 10 million subscribers already on Disney Plus. I haven't signed up for it yet myself, but I have plans to, and I'll probably go for the bundle, Disney Plus, Hulu, and ESPN Plus. And just be interesting to see. I mean, they're going to get to cherry pick numbers, right? You know, in terms of what they put out. But I bet they're going to have some good numbers to cherry pick from.
No doubt. Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials down 376. NASDAQ is up 85. S&P's down 43. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as a #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 394, Nasdaq's off 90, S&Ps are off 45, and about 20 minutes ago, folks, this is pretty intense. Delta just is going to suspend all flights to China from February 5th through April 30th, Tom. February 6th.
Not messing around, man. Not messing around at all.
Yeah, and what they're doing, folks, is that they're going to fly until February 5th just to get the people out that they already got there. They're giving them a chance to basically get back home. So
that's good. I'm glad they're doing that because it's got to be really scary being over there.
Trapped like rats, man.
Exactly.
That's a long time, though, man. You're talking 2 months.
Yeah, and I say that, but boy, you know, it's kudos to the pilots and the crew going over there because that is not easy either, and they're doing a good service to the people that are trapped over there. Hopefully, they're being safe about it. I'm sure they are. But yeah, through April, that's startling.
That's you know.
And I mentioned, I believe Delta with earnings next week, so I'm sure maybe they're getting ahead of their earnings call,
which would be really smart. That's right. Hey, you know, April 13th. April 13th.
Okay, maybe not then. Maybe they already came out with them.
There, it's 2 months. That's oh my God, that's a sixth of the year.
Yeah.
That is one big number, no doubt about it. Gold's continuing to catch a bid here. The gold market's getting a little bit nervous out here. Well, GC.
And Delta did already come out with their earnings, my bad, on January 13th, so either way.
Yeah, so this gold market, we're at 1592. You get the volume. It's going after it, man. You know, we'll see how this shakes out. And I think that has more to do with the euro. See, the euro continues higher. The dollar continues lower. Stay right there, folks. We got Think or Swim coming up next. Then I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Look at him, folks.